one of the things that will keep you in trading is not about the trading plan only. It's about understanding the market structures and patterns and how they do work. And I want to show and demonstrate that to the chart work so that you can have a briefly understanding what I do mean when I say market structures and pattern will save you years of being in this particular game. Now, the first number one thing, there are two things that we have to understand. The first number one thing is pattern, and then the second thing is called structure. Okay, so these are two different terminologies. However, I want just to keep it simple and brief so that you can really understand what you need to really focus on when it comes to market structures and when it comes to patterns. Now, it's not necessary to be attached with patterns or market structures, because when we speak about structures, we mean the general overview of price action on how it looks like in the higher time frame. So any pattern that happens, like for instance in this example, we can see here there is an expanding structure that is developing currently, is giving us more of the message of turning to the downside. So that's what it means, the overall message of what it stands from the higher time frame. However, when we now speak about patterns, we refer to the common behaviors that we see in the market, especially in lower time frame, before we take our position or execute our position. Now let's take an example on this GBP card. And from this particular scenario, I normally look on the area, I look on the structure, and I look on the candlestick before making any bold decision. Okay, so looking on the area, we can see that we are sitting at a good area volume. Looking on the structure, we have a clear expanding structure towards the volume area, which indicates more of the reversal. And now if we look on the candlestick formation, we can see these are momentum candles to the upside, which indicate that we had that first touch, we had that second touch, and now we are looking for that particular third touch for us to really look for the opportunity to push to the downside. So if you come to the higher time frame, you would have seen the area is confirmed, the structure is there, and the candlestick are already indicating what we need to do in the first place. Now if we come to the H4 time frame, now this is what we call the confirmational time frame. So what we are waiting, we are just waiting for the price to confirm the third touch within this particular position. And this is what I was speaking with my guys, the members in 7 Principle, that you need to really understand the common patterns, meaning that the common behaviors that happens within the market. Because before we had something like this, okay? So this was acting more as an override area. However, I told them that the price, when it's quite so near and close to its third touch or another key value area, more often than not, price just gravitates toward that particular area. So you need to understand small behaviors, small patterns that really happen within the market before you decide to execute any trade. And imagine what? This is the current movement. You can see we closed with a nice retrace from the 4-hour, and then now we can see the price has still just pushed to the upside. And what are we waiting? We are just waiting for the price to approach at the third touch, which means at this stage we just be waiting for the price to tap over there, then push down, followed by this particular continuation for the next run to the downside. Now, why did I earlier on mention that common patterns and common structures are very important to consider? This is my answer. When you are looking in the higher time frame, you are looking for common information that will give you the upper hand information to understand the validity of the trade that you are in, which means you'll understand it through its market structures. However, when you now move into the lower time frame, it means that you are prepared to understand and to find the common patterns that happen within the lower time frame so that you can really execute the position or the trades. Now, for those who are trading the same system as me, you would understand that when we have the expanding structures, we have more often than not 3 scenarios whereby we can take the opportunities. The first one is like so, when we have this 1, 2, 3 touch clear middle section, we know at the 30 touch of that particular run, and especially when it intersects with an earlier value, there is always an opportunity for a risk entry if the market provides with 1. The other thing that we normally see is that we normally see for the price normally pushes to the downside and gives us that first continuation. So second thing is that you are waiting for the continuation. Now, what about the third thing that you need to really concentrate on and focus on? So the third thing is about the hover. Okay, now one could ask me, what is an hover and what does that necessarily mean? For instance, take an example that the price has already snapped over there. We had a push, and then you start to see price is doing something like this. Okay, it's forming a continuation here, then larger continuation, and then again push to the downside like so, and then in these particular areas you have a continuation like that. This is what we call a hover, a continuation around this particular area. However, more often than not, with the ascending, these are the ones that normally have a good hover, to be more specific. So what I would say is that before you execute any position, you need to understand its common patterns, its common structures. What does it look like in the higher time frame when it plays out? And what does it look like in the lower time frame when it wants to provide the opportunity? Once you are clear on that, your trading plan will save you years of not having the noises, and understanding the patterns, understanding the structures will give you the confidence to take the trade.